everyone knows like I should be spending an hour or 2 hours a day on it. But what am I going to do? Like, I think a lot of people end up just opening up their pricing tool and just kind of looking at some numbers and looking at some bookings and then making some random changes. But what they don't have is a real strategy or a real plan of action.
So the KeyData report mentions that national ADR is basically flat. What are you seeing in terms of market trends and demand trends from your side of the house?
This year, there's definitely a lot of markets that are pretty weak compared to last year. Like San Antonio, for example, is a good example that's really down. I'm talking about like 20-30%. So ADRs are not going up. And then because of inflation, real ADRs are actually going down. So ADRs should be going up by like 4 or 5% a year.
What is the difference that having a expert revenue manager, like what can a revenue manager even do if the market demand is flat?
And the challenge is that you don't really know what you don't know. We have a lot of examples of clients who came to us and they were telling us that they were already operating at the top of the market. And so in their mind, there was no room for improvement. But then after working with them for a while, their revenue would go up by like 15, 20, 25%.
Welcome to Get Paid for Your Pad, the definitive show on Airbnb hosting, featuring the best advice on how to maximize profits from your Airbnb listing, as well as real-life experiences from Airbnb hosts all over the world. Welcome.
Get paid for your pad. Get paid for your pad. Get paid for your pad.
According to KeyData's newest trends report, most operators say that pricing is a top priority. But ADR is basically flat and competition is rising quickly. So if everybody cares about pricing, why isn't revenue moving? Today, Jasper and I are going to unpack what the best operators are doing differently with pricing, tech, and OTAs, especially those mid-sized companies that KeyData calls the growth engine of the industry. Welcome back to Get Paid for Your Pad. I'm Kaye Putnam, and I'm here with the OG, Jasper Ribbers.
What's up, everybody? Thank you for the invite, Kaye. I'm excited to dive into it.
I invited you back onto your own podcast. We've been having so much fun. Yeah, exactly. So I sent over this report because I'll kind of give away the big takeaway that I had here, but it asked operators, I think they interviewed about 240 different operators of different sizes, different markets, and it asked them, what are you most focused on in 2026? And number one was marketing and distribution, like, ooh, yay, from the marketer here on the team. And then number two was pricing. So to me, that was just great confirmation that we are in the right place at the right time. But I'm curious, what, if anything, stood out to you as you read the report?
Well, these reports have been coming out for a long time, and I always read them, and there's several companies in the industry that release these reports, like KeyData has one, like Price Labs came out with a report as well. Today, actually, I read it earlier today. And it's always funny because I think for the last 5 years, pricing has always been either number one or number two of what operators want to focus on, but they never do. So I'm hoping that this year will be different, that in 2026, short-term rental operators are actually going to give revenue management and pricing the attention that it deserves.
Yes, we have definitely been speaking this message as far and wide as we can. Why do you think that is? Why don't people take action on that intent? What stops them?
Well, I think there's a lot of stuff in the short-term rental business that is very reactive and time sensitive and urgent. If you have a cleaner who's dropping the ball and your guests are arriving in 2 hours, and you have the choice of like, all right, these guests are walking into a dirty home, or, I focus on pricing, or I go to the house now and I figure out how to get it clean so the guests are going to be happy, and I'll do the pricing later. Now, most operators are going to be choosing to solve the immediate problem at hand. And then the idea is, well, I'll look at pricing tomorrow morning. But the reality then is that tomorrow morning, somebody else comes up. And so pricing and revenue management, it's always like, yeah, you got your pricing tool set up. It never really feels like the most urgent problem to solve, I guess. And as a result, it's just one of those things that always gets pushed off, and people will just spend time on it if they have nothing else to do, which in the short-term rental business is not very often. That's my guess, but
I imagine it's also, we even We do revenue reports, free revenue reports for companies that are over $1 million. And a lot of them even say that pricing is really important to me. And I'm in my pricing tool once, twice, maybe even 3 times a week. And I'm doing different things. So there's a difference between doing something and then doing something strategic. So what are the biggest differences that you see when you're doing these revenue reports when an operator says, yeah, we work on our pricing weekly? What tells you that they're not doing the most strategic job?
Yeah, it's a good question. And I think that's actually one of the reasons that people don't spend enough time on their revenue management is because they're not really sure what to do. Everyone knows like, oh, I should be spending an hour or 2 hours a day on it. But what am I going to do? Like, I think a lot of people end up just opening up their pricing tool and just kind of looking at some numbers and looking at some bookings and then making some random changes. But what they don't have is a real strategy or a real plan of action of like, hey, on a daily basis, I do X, Y, Z. I look at this and here's how I make decisions based on what I'm finding. I feel like a lot of operators are kind of in discovery exploration mode of like, all right, let's look at some graphs and let's change some prices here and there. But you need to have a real routine. You need to understand what are the most important data points to look at and how do you make decisions based on those data points. And once you have that, then you have a routine that you can follow. You have a process that you can follow every day. Like we do, we have a daily process, we have a weekly process, we have a monthly process. And so that makes it really easy because, when I wake up and I start my day, I know I have X amount of portfolios that I manage. I know my daily routine. So I know exactly what to do, what to look at, how to make decisions. And I think that's what most operators are lacking. And so yeah, when you talk to all the people that apply for like a revenue report with us, if you ask them like, what's your process, right? We always ask that, right? What's your process right now? Like how much time do you spend and what do you actually do? And if you ask like 20 operators, you get 20 different answers. But it all sounds pretty random. Most operators will admit it too. They'll say, yeah, I spent 30 minutes a day, but yeah, I don't really have a routine or I don't really have a process. I just go in there and look at some stuff and make some changes and then that's it, right? So yeah, I think that's what's lacking in the industry. And there's not a lot of education to it. I mean, you can't blame these operators because where are you going to get that knowledge? Or everybody kind of has to invent their own wheel because there's just not a whole lot of education. There's no like in hotel revenue management, you have certificates. Like you can go to Cornell and study revenue management for hotels, right? We don't have that in the short-term rental industry.
Yeah. Side note: if you want us to run a revenue report on your company, head over to freewildfoundry.com/report. And if you're over that $1 million mark in annual bookings, we will take a look at your strategy and give you an expert opinion on what you could do better, what you're doing well, all of those things. So the KeyData report mentioned that national ADR is basically flat. What are you seeing in terms of market trends and demand trends from your side of the house?
Yeah, I would say, there's definitely a lot of markets that are pretty weak compared to last year. I think a lot of markets in Texas are pretty weak. Like San Antonio, for example, is a good example that's really down. I'm talking about like 20-30%. So if ADRs are flat over the year, I think in a lot of markets, probably occupancy is down a little bit because I definitely see markets that are down year over year. But yeah, it doesn't surprise me that ADRs are not going up. And then because of inflation, real ADRs are actually going down. Right? Because your $100 that you're receiving this year are worth a little bit less than the $100 that you were receiving last year. So ADR should be going up by like 4 or 5% a year just to break even, right?
So it's no wonder. Yeah, it is a tough market. It's no wonder that people are feeling the crunch or the squeeze because that is very real. Even if ADRs are flat, just overall purchasing power, both for your business and for the individuals, is going down with the inflation factored in. It's a challenging time. What is the difference that having a expert revenue manager, like what can a revenue manager even do if the market demand is flat?
A lot, I mean, it depends on what your how good you are at revenue management right now. I just did a webinar. As you know, I just did a webinar with Top Key, right? Where we did a presentation and a training on how to control pacing, which is one of the most important concepts in revenue management. And I would say about 1 in 20 companies that do a revenue report with us, they do an excellent job at it. And we basically tell that operator like, hey, you know what? Like, you should just continue. If you like doing the revenue management, continue doing it because you're doing a great job at it. Those are rare cases. And the challenge is that you don't really know what you don't know. We have a lot of examples of clients who came to us and they were telling us that they were already operating at the top of the market. Their occupancy was already really high. And so in their mind, there was no room for improvement. But then after working with them for a while, their revenue would go up by like 15, 20, 25%. And they're very surprised because they're like, how is this possible? Like, we were already doing so well, but you don't know what you don't know, right? And so if you have a revenue manager that's currently managing your portfolio, if that revenue manager doesn't know how to maximize your revenue, you might be leaving like 20, 30% of revenue on the table. But in your mind, you might be thinking, well, I've got a revenue manager, I've got high occupancy, I'm doing pretty good compared to the market. So how much upside could there be? Well, you don't know. It's really, you don't really know. And we know for a certain extent, but also we don't know it perfectly either. Like, we can make an estimate, and our estimates are getting pretty accurate now. But at the end of the day, like, the only way to know is to actually go in there and putting in the strategy and seeing what happens, right? But it can make a huge difference. And, I think the revenue management side is great when you increase revenue because it doesn't add additional cost to your business. Because what are in the current market circumstances? So, like, how do you grow year-over-year revenue? Well, you can improve your marketing. You can, get a new photo shoot or work with influencers or set up, direct marketing. There's a lot of things you could do to drive additional revenue. You can invest into amenities. There's a lot of things that you can do, but they all require investment. But the revenue management, if you do it yourself, like if you're an operator, you do your own revenue management, like if you improve your skills and you squeeze out an additional like 5-10% of your top line revenue, that goes straight to your bottom line and the bottom line of your owners if you're managing, because there's no additional expense to it, right? So that's one thing I would say. And the second thing I would say is, when you think of a revenue manager, the cost of your revenue manager is not really what you pay them. It's their ability to increase your revenue. Because we have a lot of clients that we're currently working with that used to work with a very affordable revenue manager. One of our clients had a revenue manager in the Philippines, for example, that they were paying, I think, $1,200 a month. So that sounds like, oh, great deal. I have a revenue manager who only cost me $1,200 a month. This is a portfolio of like 140 listings. Now that client is now with us for over a year and they're paying us a lot more than what they were paying their revenue manager in the Philippines. And not saying that people in the Philippines are not good revenue managers. Right? This is just an example, just to be clear. But we increased their revenue by so much that their cost now is actually lower. If you include all the additional revenue that we're generating, we're actually free. In fact, we have a negative cost, right? we're actually like making them so much more money that our fee is actually lower than the additional revenue that we're generating. And so we're actually a net positive and we're taking over the work. So that's something that you just have to keep in mind when you think of revenue management. It's not necessarily what you're paying your revenue manager. It's like, how good of a job are they doing, because they might be costing you several $100,000, if not more, in revenue, even though you might be paying them very little. So that's just a thing to consider.
That missed revenue, that invisible missed revenue, is something that we don't see because it's not materializing, but it is a very real opportunity cost for trying to skimp in this area.
What's up, guys? Eric here. And before we dive into this episode, I want to introduce you to our podcast sponsor, Freewyld Foundry. Freewyld Foundry is a revenue management service, white glove, high touch service for the top 1% short-term rental operators. We're currently managing over $60 million in bookings, 1,700 listings worldwide, and we are growing very, very quickly. Our RPM program is a done-for-you revenue management service, and I want to invite you, if you are a short-term rental operator that's doing $1 million or more, or maybe about 15 listings or more, head over to freewildfoundry.com and apply for one of our free revenue audit reports. This is where Jasper and the team will actually take a look at your pricing strategy, audit all of your Airbnb listings, and let you know if you're leaving money on the table. So this is free to everyone who's listening to this podcast. Head over to freewildfoundry.com and apply for your free audit report.
So another interesting part of the report is that they identified that mid-sized companies are the most bullish for their results next year. They're expecting essentially the biggest amount of growth. And then some other attributes that were interesting about mid-sized operators, they tend to be more tech forward. So they have the highest adoption of pricing tools and marketing systems. They actually are more frequent with pricing changes. So they tend to do it daily or multiple times per week, and they're more data engaged. So we work with mid-sized companies that typically 1 million up to 5, 7, 10 million kind of range of managers typically. Does that ring true for what you're seeing on your side with our clients? And is there anything else that makes them unique from maybe the smaller mom and pop types of businesses?
Yeah, it's interesting. I think there's kind of three categories, right? There's like the really small, like mom and pop operators who might not be too focused on the numbers and year-over-year growth and technology and all that stuff. They might just be running like kind of a side hustle. And so they might just not be super focused on that. Where I think the larger companies, I think there's a difference between like when you run like thousands of units and you're a big company with lots of employees, you might be studying the data more, or it might also be harder to make like significant changes as well and increase revenue. That probably have more professional people working on the team and everything. So to me, it kind of makes sense that like when you're in the middle there, that you feel like there's a lot of upside, and maybe also like just enthusiasm. Maybe it's also like if you haven't been in business for that long, I think you naturally have a lot of optimism as well. So that could be part of it as well. But yeah, I think that the biggest opportunities are probably for those operators, right? Because the larger operators, they typically already have a lot of stuff dialed in, right? They probably have an in-house revenue manager who knows the portfolio, the market well. And so, if you're in that, like, let's say anywhere from 25 to like a couple hundred listings and you're doing the revenue management yourself, that's probably true that you probably have the most opportunity for growth. So kind of makes sense.
Yeah, it's like you have enough scale that you have a bit more insulation from like little shocks in the system, demand shifts by 10% or even 15%, or some regulation gets passed. Like you have enough resources to deal with those types of things. But yet, like you said, you're still small enough that you're nimble and you can move quickly as things are evolving. And business in general, short-term rentals included, business is changing so quickly. Like AI, all of the tech tools that are coming out every single year, it's bananas how fast everything is changing. And if you're not so bogged down with bureaucracy and massive teams, so if you're not taking advantage of that, you probably even have a bigger upside available to you. So yeah, super, super interesting.
Yeah, exactly. Like you're still small enough that you can actually make changes quickly and implement new tech, and you don't have to go through, the advisory board and the God knows what.
Exactly.
And the smaller you are, the easier it is to make changes, I guess, right?
Yeah, exactly. Another interesting section in the report, they talked about OTA dependence, which has been a hot topic here on the podcast. And they mentioned that across all of the companies that they surveyed, direct bookings made up about 26% of average reservations, but 38% of revenue. So higher rates, longer stays, and a longer booking window. And then on Airbnb specifically, they didn't mention the other OTAs. It tends to make up 45% of bookings on average, but only 34% of revenue. So shorter stays, shorter booking windows. Super interesting. What are you seeing with our clients in terms of OTAs? Like, are they shifting or trying to shift more towards direct? Are they changing their channel mix? What are you seeing coming down in 2026?
Yeah, I mean, I think one thing that really accelerated the trend towards more OTAs and less dependency on Airbnb is the changes that have been made on the Airbnb side in the last year or so. It's becoming very difficult to get bookings on Airbnb if you don't have like a really good rating. Like a couple less than 5-star reviews can really tank your listing in the search results. And so I think that naturally is driving people to seek out other channels, right? Because if you're 100% on Airbnb and your listing gets suspended, which happens a lot now. I mean, we see it almost every day in our clients' portfolios because we have so many listings under management. Almost every day there's a listing that gets suspended because it happens very fast now. I'm sure everyone's aware of that. So yeah, so I think it makes sense. People are looking for less dependency on Airbnb. And I think as far as direct bookings go, it makes sense that the bookings are typically longer because people book a longer stay. They're more inclined to contact the host directly and negotiate versus like just booking like a 2-night stay. You're probably just going to book an Airbnb. I mean, I'm looking right now for the summer. We're living in the south of Spain, and here in the south of Spain it's beautiful and it's amazing. But in July and August, it's hot. It's very, very hot, and it gets very crowded here. We live on the beach here, and there's like thousands of people, if not hundreds of thousands of people, billions of people flocking down from Northern Europe and to spend time on the beach here in the summer. And so that's when we want to get out. So I'm looking at on Airbnb to rent a place for 2 months in July and August in the Netherlands, where I'm from, right? Visit family, friends. And so I go on Airbnb, but there's no way I'm going to book a 2-month stay. Just boom, out of nowhere. Like, I know that if I can get the contact information to the host, I'm going to call them and say like, hey, I'm looking to stay with you for 2 months, right? I don't want to be paying the Airbnb fees. I know the host is paying them now, but still, obviously, like if they have to pay it, they're going to charge me more, right? So yeah, for my 2-month booking, there's no way I'm going to make it directly on Airbnb, right? And so those are the high value and the longer bookings. So it makes sense that those go to direct. And yeah, direct, I mean, it's been a focus for operators for a long time to increase their share of direct bookings. And yeah, I think, the market being sluggish and the challenges that a lot of operators have now with Airbnb is only accelerating that trend, I think.
Yeah, we've had several episodes about this if you want to dig deeper into it. Recently just interviewed one of our clients, Beth, who crossed the threshold of getting 1,000 5-star reviews. So it is possible to have a 4.9 and above. Beth and her company, they're actually sitting at 4.99 with their portfolio, which is incredible. So it is possible. It takes a lot of effort, and it creates a risk factor if you are wholly or primarily dependent on a single channel. So it really makes sense to add that diversity in of the ways that you're marketing and the ways that you're booking and the ways that you're earning all of the revenue that you're bringing into the business. So I think that we'll continue to see that more and more, both with our clients and the industry as a whole. Curious question. When you are pricing and looking at revenue management for different channels, are you and the team mostly looking for parity, or do you have different revenue management strategies for different channels?
Yeah, it's a good question. I think in general, our clients typically prefer that their direct booking channel is the most attractive, has the cheapest price. It's very difficult to have complete price consistency over the different channels unless you're not using any OTA specific discounts, which is not a good idea because then, it's just going to hurt your conversion and your visibility. So if you're on booking.com, you got to use Genius. You're just going to lose so much opportunity and revenue if you're not using the Genius program, the loyalty program that they have. But the consequence of that is that the price that someone's going to pay is going to depend on whether they're a Genius or not. Other discounts that Booking.com offer is, for example, mobile-only discount. It's a very important discount. It's one of the most important ones you get. But you're offering a 10% discount if people book a mobile. But most people book a mobile. It gives you extra visibility when people go on mobile, right? And people are so used on Booking.com to get discounts. So you got to have some discounts. But here's the challenge with that. Let's say our price is $100 in Price Labs or in a pricing tool, right? And let's say we have a 20% markup on Booking.com. That means the price on Booking is going to be $120 for the night. Now, let's say we have a 10% mobile and a 10% Genius discount. If I'm a Genius and I book on mobile, that means I'm getting 10% off the 120. That brings it down to 108. Then I get another 10% for mobile. So 10% of 108 is like 10.8. So that's like quick math, $27.2. I don't know if I'm calculating this correctly, but you get the idea, right? The price is going to be a lot lower than the person who's not a Genius and who's not a mobile. That's a pretty big difference, right? Price consistently over all the different channels is basically impossible unless you don't use any of the OTA specific discounts. And that's just going to cost you more than the price discrepancy will hurt you. So we typically just let go of the idea that our prices have to be 100% perfectly in line on all the different channels. But what you can do is, if you have a markup on Airbnb to cover the commission, you have a markup on Booking.com to cover the commission and the discounts, and on your direct booking channel, you don't have that markup, then generally your direct channel is going to be the cheapest. But there could be situations where, let's say you have a new listing on Airbnb, you have the 20% new listing promotion, or you have a new listing on Booking.com and you're trying to get free reviews, so you're eligible for the Genius program. You might want to push a platform and make it a bit more attractive than your entire booking channel, just because you have a goal of getting, those first free reviews in that will help you get more traction on the platform, right? So there are situations where, the direct wouldn't be the cheapest one necessarily. But
yeah, lots of nuance, as with many things with revenue management. Further underlying the value of having an expert take a look at how your current strategy is set up. Going to plug it just one more time since I'm mentioning it, freewildfoundry.com/report. What else are you excited about in 2026, Jasper?
FIFA World Cup.
Yes.
For multiple reasons. Because I'm a soccer fan and I hope our country is going to be the world champion, of course. But also because it's going to be the one thing I think that could be driving some revenue growth year over year, especially in the markets where the games are being held. But then even outside of those markets, like people are going to be traveling through the States. And if you're flying in from, I think New Zealand qualified, I think that's a 2-day journey to get to the States from New Zealand. You're not going to just watch the game and then fly back, right? You're going to be like taking advantage of that time and spend like a week or maybe 2 weeks, go to the Grand Canyon or Yellowstone Park or whatever is on your bucket list. You're going to be taking advantage of your travel to the States to, see some other things there. So I think that's going to be driving significant demand. We don't know yet how much, right? You never really know how many people are going to travel. But in what we do know is that there's going to be a lot. The question is how many and how much can we charge? But that's what I'm most excited about for 2026.
Yes. If you're not subscribed yet to Get Paid for Your Pad, make sure you hit that subscribe button wherever you are listening, because Jasper is going to be sharing some episodes, particularly around like right after the December 5th. What is it, like a team draw? What's the official name for what's happening on December 5th?
Yeah, so it's the draw for all the games that are going to be played. So the way that the World Cup is structured, it's going to be 48 teams. Now, most of them are already known. There are some qualification games happening in March, some playoff games. So there are some teams that don't know yet if they're going to be qualified or not. But I think that's only, I'm not mistaken, that's only 6 teams. So I think out of the 48 teams that will participate, I think 42 of them are already known or will be known in the next couple of weeks. And my screen just went black. I have no idea why, but I'll just continue to talk. But I would say December 5th, those 42 teams who are qualified already are going to know where they're going to be playing their first 3 games, the group stage games. And that's going to be very important because depending on what team plays in your city, you might be expecting a ton of people visiting or you might be expecting fewer people visiting. So it really depends on how popular soccer is in that country, how many people live there, how far away from the States is it. I don't expect too many New Zealanders to come because New Zealanders care more about cricket and rugby, I think, than soccer, plus it's so far away. But if you're in Brazil or in Mexico, obviously some of the games are going to be held in Mexico. But, like Argentina, Brazil, like Germany, England, Spain, France, like if those teams are playing in your country, those are big countries. Soccer is very popular there. So you could expect a lot of people to come.
Yeah, it is a great time to get your pricing dialed in so that you can have the most advantageous pricing possible. So yes, thank you so much for listening. I think we lost Jasper's video. If you're just listening to the audio version, you wouldn't have noticed anything. But if you're watching us on YouTube, we'll get Jasper's camera charged up for the next episode. But thank you so much for listening to Get Paid for Your Pad as we dissected the latest KeyData trends report for 2026. Thanks, Jasper. This was super interesting.
Awesome. Well, thanks for the invite, Kaye. And we'll talk to you soon. Thanks for listening, everyone.
Get paid for your pad. Get paid for your pad.